Hi, this is attorney Charles M. Green. I am a certified family law specialist in Los Angeles County, and what I specialize in is complex divorce litigation. And today, this video is going to discuss family law litigation and the high net worth individual or the high net worth couple and divorce. The high net worth divorce is distinctly different than a basic divorce because there are many case laws and statutes in the family code that need to be applied to financial situations for a family law case that is in the high net worth arena to go to trial or to be properly mediated and settled. That's what we're going to talk about today. We're going to talk about divorce and forensic accounting for the high net worth individual. This is uniquely different than the regular divorce in that most divorces do not require a forensic accountant. Okay. A basic divorce may require a forensic accountant for the family home. And I'll quickly discuss that because it could also be the situation for the high net worth individual. There is a case law in the family law litigation world called Moore-Marsden. And there's a series of cases that followed it. Those cases basically talk about if someone had a house before marriage and then they got married, does that house, that separate property house that's titled in one individual's name, does that house develop a community interest? Community interest means that it would belong to the marital community, to both partners of the marriage. Whereas separate property would mean it's one person's separate property. So what we have here in the Moore-Marsden case is a separate property house, a house where the title is recorded at the county recorder's office in one person's name, and they had that house before marriage. But then during the marriage, the community funds were used to pay the mortgage. Now, earnings, your salary while you're working, most of the time that is community funds, whether you like that or not, and a lot of people don't like that. But when you go to work during the marriage, that money belongs to the community. Your labor belongs to the community, generally, to the marriage. So if you take your salary during the marriage, pay the mortgage, you're creating what's called a Moore-Marsden interest. Another way to create a community interest during a marriage, in conjunction with a Moore-Marsden, okay, would be if you refinance the house during the marriage. Because, simply stated, when you got married, that loan on your house, that mortgage, was in your name alone and on your credit. When you're married, your credit worthiness belongs to the marriage, and any loan you take out is subject to creating a community liability, not just your separate property liability in many circumstances, especially since this refinancing of a house you had before marriage is replacing at times a purchase money mortgage, which would have had certain safeguards if there was a default or whatnot. Okay, when you refinance, especially during the marriage, and you're refinancing a purchase money mortgage or a loan that already replaced a purchase money mortgage, okay, you are now creating a community carve-out, a Moore-Marsden type carve-out in your separate property home, a community interest. All right. So these things are legal principles. But how do we take these legal principles, like a Moore Marsden, um, uh, and many other types of cases, okay, and turn them into the real numbers of your divorce? Okay, and that would be the situation in many of the high net worth couple divorces. We have to employ, in many cases, a specialized type of forensic accountant, okay, a litigation support accountant that specializes in interpreting case law and statutes in the family code or other related laws, and using those as a filter to put your financial situation through and decide what it is your separate property and what is your community property. And this can be very tricky, like in a Moore Marsden, when you're talking about an asset you had before marriage. But in many instances, there is a carve out of a community interest in a separate property asset that you had before marriage. Now, moving on to the basics of a forensic accounting project for the high net worth individual, there are several major products or processes or reports that are generated. Okay, and there are several major areas of the divorce litigation that are addressed in the forensic accounting project. These are support, okay, community and separate balance sheet, and the community and separate balance sheet would have below its listings your separate property business, your separate property home, any community carve out, like the Moore Marsden carve out in your separate property home would be on that balance sheet as community and or separate. And the same with a business. If you had a business before marriage and now it is a divorce situation where you brought that business and operated it during the marriage, there may be a carve out within your separate property business of a community interest. And that would be the subject of a further video, getting into the details of how those different carve outs are computed. This video is to give you a general familiarity with the forensic accounting process for the high net worth couple in dissolution. So we have the community separate balance sheet, which has all the assets and procedures performed on those assets to find out what the community and separate property interest is. And then in addition to that, okay, we have the support analysis. Support analysis can be done generally in several different ways. We can look at what is the cash flow available for support now. Okay, what was the cash flow available for support at different points during the marriage? Also, we can look at what is the marital standard of living. So even though the couple may have had a significant cash flow available for support, there are situations where they're not living at a standard of living directly connected to the cash flow. There are some couples that live above their standard of living, okay, so they're living at a standard of living greater than the cash flow. They are accumulating debt, or they are depleting one or the other separate property, maybe an inheritance, okay, or they're depleting savings that they had, one or the other had, or they had from a prior period. Okay, so their cash flow available and standard of living are not going to be a direct connection, all right? So then there's marital standard of living. Let's look at what was their standard of living irregardless, okay, of cash flow in a particular year. So some couples are living below the cash flow available standard of living because they might be saving money. Okay, they could be taking some money, putting them in retirement accounts, putting them in savings accounts. Okay, so then the marital standard of living without the savings component is less than cash flow. All right, and these types of analysis will help a judge or a mediator or a negotiated settlement to determine what should support be. All right, should support be at the marital standard of living? At what point in the marriage? Should it be the last year of the marriage? Should it be the last 3 years of the marriage? Okay, or should support from one of the spouses be based on cash flow, which, like I said, could be significantly higher or lower than the marital standard of living. So many times we do both these types of analysis to determine what to recommend to the court for our particular party. All right. So the community and separate property balance sheet and the support analysis are two of the major components that a forensic accountant will do for high net worth divorce cases. All right. Now, to briefly talk about some of the major line items that go within the community and separate balance sheet, okay, we would also have a business valuation. Now, previously we talked a little bit about Moore Marsden and the house. So the house is on the balance sheet, okay, and it can be community or separate. And a business started during a marriage can be on the balance sheet as community, or a business started before the marriage, okay, could be someone's separate property, and it could also have a community component. All right. Business valuation is a major project within the forensic accounting. So for your house, you call an appraiser, and the appraiser comes and gives you a report. You can't do that so easily with a business. And within the family code, within cases that have been decided by appeals courts and higher courts, those case write-ups, those case decisions, appellate court decisions, okay, usually have instructions embedded within the opinion on how to compute an interest in a business or how to value a business. And then there's also practice. There's the practice standards of the forensic accountants, generally accepted practice standards on how to value a business. And they would look at different components of the business financial statements, the tax returns, and they would use certain litigation principles within forensic accounting for determining what a business should be valued at. So there could be a significant difference between an economic value for your business. Economic value would mean something like if you called a business broker to sell your business, and what a family law court through forensic accounting would value your business at. They're not necessarily the same, okay? But knowing both of those is important. What is the difference between a sale value through a business broker and the appraised sort of value or the calculated value from a forensic accounting analysis within the community and separate balance sheet for a divorce case? Okay. So another significant item for someone that doesn't have a business but a high net worth individual could be something like stock options. Okay, and stock options is probably one of the more trickier and less well-known areas for family law litigation attorneys, and it's a situation where you need a very skilled, experienced forensic accountant, because stock options, you're talking about when did they vest? Did they vest? Is there a vesting schedule? Is there a list of what are the conditions on these stock options? Is it a public company? Are these stock options for a private company? Now, how do you value stock options for a private company? There are ways to do it, but this is very detailed, and your attorney alone cannot do it. Even if you have an attorney that is some sort of financial expert, okay, the attorney is not the witness. The attorney cannot create the evidence and then be the witness testifying about it. So even if your attorney is a retired forensic accountant, okay, your attorney cannot be the witness. Having an attorney that is skilled in forensic accounting means that he knows how to work with, manage, and understand the forensic accountant, okay, direct the forensic accountant, and also examine the forensic accountant on the stand. Those are my strengths because I worked as a CPA for 10 years before I became a family law attorney. And I've been practicing law now for quite a long time. And before I started practicing law, and before I became a family law certified specialist, I worked as an accountant. And that accounting experience has made it easy for me to adapt to working with forensic litigation support accountants in my complex high net worth family law cases. And even in the less complex cases when we have simply the Moore Marsden interest in the family home, which is very, very common. Many, many cases have that. And you're not going to be able to go to trial, okay, without these type of analysis for the high net worth case. So in the case with just simply a Moore Marsden, sometimes we can estimate it to save you money, and if everybody wants to agree, we could settle your case that way, okay? But in many cases, we need to provide the detailed information to the forensic accountant for them to do a full community and separate property balance sheet analysis, or just one piece of the analysis, okay, one line item or two line items of a community and separate balance sheet, like for instance, the interest in the home of the Moore Marsden. What are these stock options worth? What is the business worth? Okay, so it's very important if you have a business, if you had a home that you purchased before the marriage, if you have a business that you started before the marriage, the type of business. Is it a real estate business? It is a manufacturing business? Is it a retail business? Okay, is it a professional practice? It's very important for your attorney to be able to explain to you, how are we going to employ the services of a forensic accountant, and what is that forensic accountant going to do? If your attorney is unable to explain that to you, you do not have the right attorney for a high net worth divorce case. And these are complex issues, and you should interview your attorney very carefully to make sure they fully understand this. Okay. So that's going to be it for today. I'll do additional videos where we'll get into more detail on different types of forensic litigation support analysis for businesses, for homes, for standard of living, cash flow available. We'll talk more about that in future videos. But if you have a high net worth case, be very careful who you hire for an attorney. Ask them about their relationship with forensic accountants. Ask them to explain the costs involved in forensic accounting, and ask them why it would be necessary in your case. My name is Charles Green. I'm here in Los Angeles County, California, where I practice mostly in the Los Angeles County Superior Court system, doing complex divorces, and I would welcome the opportunity to discuss your divorce and your financial situation, and whether your case is a high net worth divorce case. And just one last point there, many high net worth divorce cases will be found and designated to be a complex litigation in the family law court. And that once it's found to be a complex litigation, it gives the court certain enhanced parameters in which to manage the case. So you should also ask your attorney how many of his cases are deemed complex by the family court system. Does your attorney even understand what a complex finding or designation in a family law litigation case mean, or when to ask for it, or when the court could on its own make that finding? All right. And again, my name is Charles Green. Give me a call, 213-387-4508, and I will talk to you on the phone. I will call you back and see if we're a good match for me to work with you and represent you in your complex family law high net worth litigation case, which is the type of case that I excel in because of my accounting background. Thank you, and I hope to hear from you soon. Bye-bye.